the offer. And then as a result of that, how does bid and ask change as a result of that? Does it change at all? Does it do nothing? Does it just sit where it is? Or does it react aggressively to what's happening on the time and sales? Okay. So notice we get most of the prints here are going off in the 90s. You see a bid pop up here into the 90s. So what we're trying to see is, you see the 1,600 shares at 183. We want to see a buyer take that out and then plop a bid to 183. And that's if we want to go long this particular stock. If we wanted to go short, again, we want to see transactions hit aggressively on the bid, okay, and then sellers stepping down. So that's basically what we're taking a look at. 1,000 shares goes off at 94. Again, no real conviction here. Okay, here we go. Got a couple sweeps up to 183. Okay, here we go. We got that size at 183. Notice no bid is really stepping up yet. And then see sellers just come right back down. Okay, so boom, we get a couple 95 prints. Here comes a 90 bid. So they're just kind of holding it right here. This to me right now looks kind of like consolidation here. It looks like nothing much. They yanked that offer there. Okay, so what that means is you saw that 2,000 shares that was at 183. They pulled that. Okay, and then chances are they'll probably put it back, or we'll see what happens. Boom, there you go. So now you get 183.05, 2,900 shares gets printed. Now you want to see a buyer step up through 183, and you want to see most of the prints go off on the offer. But what I'm seeing here is that even though they're printing here in the teens, and look at this print here, like there's a seller still holding this thing down. Okay, you still got a couple thousand shares at 183.20. So notice she prints 14, and then sellers come right back to sell at 11. We do have a bid over 183, so it looks like this thing is slowly moving higher, but it's not moving higher with any conviction. Okay, you saw that offer drop to 14. They printed that right away. Okay, let's keep going here. We see a couple 19 prints, but notice as soon as I print 19, some guy steps in front with another 1,000 shares to sell. So it doesn't look like there's that much conviction. Okay, notice they printed that right away as well. Okay, and now we're sitting here with an offer at 30 for 2,500 shares. Okay, you do have a bid over 183. This could be a decent long. Okay, because now you do have a buyer here that is slowly moving the stock up. Okay, even though there's not that much conviction in it. Notice bids are slowly stepping up. Okay, and offers are slowly being taken out. You see all that 30? All that 30 got taken out. So there's a buyer here that is slowly accumulating 1,000 share lots, 1,000 share lots. Okay. Might not be with that much conviction, but he's definitely here. Okay, here goes a 1,000 share bid that steps up. This is good. So now you have 35 to be taken out. And again, all you're doing is waiting for the transactions to come off and seeing the reaction of the bid and ask here. Okay, so notice we get a couple sellers to step down. All right, couple sellers to step down, and notice they get taken out immediately. Okay, and bids come right back. So this does look like somewhat bullish tape here, but again, no real conviction. There's no real conviction. There's still sellers that come back down. See this guy, 900 shares, 183.20. Again, still sellers that come back down and hold this thing down. You know, so I would be cautiously bullish this thing, and chances are I probably wouldn't even make a trade in this thing. You see a couple down ticks, and again, you know, you see it sweep right back. Most of the transactions are happening on the offer, but again, you continue to see sellers come back and holding this stock down. Okay, and what you'll see at the last second here is a big sweep through 35 and then up into the 40s. So you know she's holding 183 now. You know you have a buyer that is buying up decent size in this thing, and it's enough to make a trade. It's enough to make a cautiously bullish bet. I wouldn't make the trade simply because it's not bullish enough for me. You know, but again, you got to learn how to adapt the tape to your trading style as well. Okay. So that's generally what I'm seeing and generally what I'm looking at. You notice that 25 got bought out real quick, and then you'll see this last sweep up right here. Okay, so again, you're still seeing offers being printed, okay, and you're still seeing bids hold up the stock. All right, so that's generally what we're looking for, and there goes your last little sweep right there. So they print all the way up in the 30s, and you get a bid up here at 30. Okay, so again, most of the offers are being printed on the offer, and then bids stepping up. All right, so that was the end of that video. I apologize for the technical difficulties, guys. Let's take some questions.
All right. Christy asks, what does sweep mean?
Okay, when you see a sweep, all right, when you see a sweep, let's see if we can get this video up again. When you see a sweep, that means a sort of a large amount of orders. You see that right now. Okay, so see that all happen within fractions of seconds right there. Okay? So when we say sweep, that means somebody swept the book. That means somebody sent out a market order, right? You see that? So again, you're seeing the same thing within fractions of a second. So what happens is, and this is all from the structural side. Let's say somebody sends a 1,000 share order or a 2,000 share order, and they click market, right? They don't do a limit order. They click market. So what happens is when you send that order, okay, whatever your broker is or whatever the order executing engine behind executing that order, they break up the trade into 100 share lots often, okay? They break up the trade into 100 share lots, and then you get a big sweep, all right? So what it does is it sweeps the book. So if there was 97, 99, 183, and you're sending a buy order, it'll take all of that, all right, or as much as it can, all right? So that's essentially what I mean by sweep, all right, when you see a big market order come into the market and push a stock up or down. That's what we mean.
Luch, here's a really good question from Charles R., who's been real active here in the questions and answers. He says, it seems like time and sales only applies to small time frames, meaning it really wouldn't work for a swing trader. And I know that you have a lot of swing traders as students too.
Right, and again, that's a big negative. So what you're taking a look at right now is, again, short-term sentiment. But you need to understand that in the short term is what you're picking up to develop a thesis for a swing trade. And again, to go back to the Las Vegas Sands example, right? And let's see if I can pull that back. So to go back to what you're, and again, if you were looking at the tape for an hour, and if I could scroll through the tape for an hour with you, I would. And this is something that I've done for the students in my class. So we've scrolled through the tape for an hour, and you saw a buyer buy 100,000 shares, okay? Now think of the dynamic of somebody who goes long 100,000 shares or 200,000 shares or even 500,000 shares, okay? What the hell does he know that you don't, right? So obviously they are the ones that are moving the markets as well. If they continue to buy shares like that, then there's a trade there. And that's also the basis for it. One of the biggest swing trades that has happened in the last month. This Las Vegas Sands is now trading $67. So there's your swing trade for 2 weeks based off of what we saw on an intraday basis, okay? And that's where you're really seeing things that can develop a thesis for you on the swing trade basis, okay? So again, when you're looking at time and sales second to second, that's what it feels like. All right, so you need to decide if you're looking at tape for the scalp trade, okay, which is a perfectly good way of trading, okay, and you're taking 10 cents, 20 cents on a Tesla and all that kind of stuff, or you're looking at tape to try to find where the big picture moves are going to happen on the select stocks that you watch. Guys, I only watch 10 to 15 stocks. So if I'm sitting there, I've been playing MasterCard, for example. Right, and I'm sitting there trying to plug a short in MasterCard. What I'm sitting there looking at is I'm looking at the tape every single day for hours a day to wait for the entry and wait for the confirmation or wait for the seller to come into the market. I'm waiting for a seller to show me that she's got size to sell. Right? And that's the basis for my short swing trade, mind you. Okay? So there's plenty of ways to use tape, like here in this Las Vegas Sands, to clue you into some of the biggest swing trades and the timing for the biggest swing trades on the planet here. Okay? And to give you a great example, and actually let's actually pop this up for you. Let me push back to let's see. Let me push back to my Fidelity platform. And I'm going to show you a move on Priceline, which was the start of the biggest rally, swing trading rally on Priceline. And this was from $470 way back in the day. All right. So
and folks, we got some people coming in asking who's in the background. That's Pete. Pete's the other hedge fund trader with Lucci over there.
Oh, the camera's on. What's going on?
Yes. Okay. So Priceline here. Okay. You take a look at this Priceline and look at for the past 3 years. You see all this consolidation.
Hey, Luch, can you make that a little bit bigger?
Yes. Let's do that. Let's do that.
Beautiful.
Okay. Let's see how that works. Okay. So what we're taking a look at is right here. Now you see all this consolidation. All this consolidation is she's going up 100 points. She's going down 100 points, up 100 points, down 100 points. She was in this consolidation for a long time. Then what happened was she tightened it all up. She tightened it all up during this. All right. And what happened was, this was the consolidation where people were building giant long-term swing longs in this position, okay? But there was a last-minute fake out where they dumped this and all the options went to literally nothing, okay? And everybody got shaken out of the trade, all right? This was one of the biggest rallies here on Priceline, okay? So this was from $470 to about, $750. So you want swing trade? Again, tape can really clue you in to some of these really big picture breakouts. So you see this on the Priceline, you're going to see it on the LVS, and you're going to see it on several names going forward, okay? And the real big question with all trading is timing, guys. It's like, when is this going to happen? You know Priceline is going to rip 200, 300 points, but how come it didn't happen here? How come it didn't happen here? How come it didn't happen here? How many people do you think were buying here? Do you think you would have been buying here? Yes. You think you would have bought here? Yes. You think you would have bought here? Yes. And you would have got smoked every single one of those times. The key in this game is timing. And that's what time and sales and level 2 can really help you out with. Because timing these moves is the difference between hanging on till they actually happen, okay, and the difference between getting burnt out before the move actually happens and then you're no longer there, all right? So that's just another example of how you can use it. And the time and sales, by the way, during this consolidation was very important. There was a lot of players during this consolidation, and then the big shakeout that happened right here was very important as well. So that was a big trade for us too. I think we made $250,000 on that trade. And by the way, we made $250,000. And if I held it, I would have made 1.6 mil. So I bought a weekly at 475. I sold it at $500, and it went to 520. This was just a weekly option. I could have swung this thing and done much better. But the weekly, if I held it, I would have made 1.6 mil. So again, timing these things with options, figuring out when that big picture breakout is going to happen is very important. That's the difference between you catching the move and you just sitting there watching it. All right.
Yeah, we got a lot of questions on what you're actually trading, so that's probably a good segue there, Luch, is you're trading options.
Let's do it.
And, a lot of people asking, John P. asking about, can you do this with bonds? Jacob asking about futures. We got Drew asking about stocks.
Okay. And again, so the names or the things that you want to look for when you're using tape is a lot of equities. You want to do it for options, and you can do it for some futures markets, okay? For bonds, the problem with real liquid markets, especially like Forex and the bond market as well, is that it's super liquid. You don't even know how to decipher all the information that's coming out on your time and sales. So what you want to do is start filtering it out for a size over whatever the average lot size is for bonds or whatever it is. It works best for equities and options because it's light enough in terms of the volume that you can really see the footprints of, let's say, a large institution or smart money that wants to buy or sell a large position. So that's really what you're looking for when you look on the tape.
Yeah, I don't know if we can do this, Chrissy, but Luch, can we show, what we just showed on the chart there? Is it possible to show that on tape, or would we have to do something like that live?
Okay, so yes, we would have to do something like that live. And again, to go back on the tape for that particular name and to go back on historical tape and show you, it takes a lot of digging time from my side to find exactly those different periods. Because you got to remember, we're talking about hours of data here. We're talking about minutes and seconds. Every single fraction of a second counts here. So to find all that information is difficult. It took me a while to find that LVS information. So what again, it needs to be done in real time. To answer your question, yes, absolutely, it needs to be done in real time.
All right, Jackie said it wasn't fair that only your face got shown, so she asked me to show mine too when I asked the next question. All right, we got a lot of people asking about level 3, Luch. Can you go into detail on that?
Okay, so what level 3 is, all right, it's more access to a lot more information. Hang on one second. I'm gonna share just a level 2 right now and then expand on that. So basically what it is, it's a little bit more access. That's all it is. So you're getting more access to different routes and different exchanges. So can everybody see this window here, this level 2?
Yeah, it looks pretty good. If you can make it a little bit smaller too, that'll help. But yeah, it looks pretty good.
Okay, let's try this.
Beautiful.
Okay, So what you're seeing here is again, you're seeing all different exchanges, and again, the market is closed right now, so you're not seeing the whole data and you're not seeing everything. Okay, so in a liquid market, you would see Arca, INET, you would see tons of other exchanges bidding and offering for a stock or equity or whatever you want to call it. So on your level 3, you're just getting access to more information. You're getting access to more exchanges. You're getting access to more routes. Okay, that's honestly all it is. So is it necessary to have all this flow of information, to see it all? It's definitely beneficial. But at the end of the day, you're still going to see the transactions come off, even on routes and exchanges that you can't see. Okay, and this is, again, it's another advanced concept, and it really shows you how much you don't have access to, though. You know, at the end of the day, I mean, you don't have access to dark pools. You don't have access to see all the routes and exchanges that are out there. Okay, you got to pay for a lot of this information, and a lot of this high-level information, it only goes into the hands of of the people who have the money to pay for it, which is not you. Okay, so again, think about what you could do if you had access to all the retail flow that comes out of, let's say, Options House or Thinkorswim. If you knew, or if you saw all the retail flow that came out of Thinkorswim, what could you do with that information? Think about it, right? And that opens up the world. That opens up the whole world of possibilities on what you could do with that information. And if you think people are not taking advantage of that, you have lost your mind. So that's
all right, folks. I got some question here from Wong D. And bring that back up, Luch.
Okay.
I'm going to go over some questions right on that screen you were just showing.
Sure.
First question from Wong D. Can you go over what the color coding mean? Is it customized to what you're doing?
Yeah. Okay. So all that means is that it's just a different price. So you notice the color coding changes every time a different price goes, and that's only for you to make sure you understand. Actually, let me minimize this a little bit so you can see it better. So this is only for ease of use here. So you notice 7462 is in one color, and then notice both the bids for 7460 are in another color. It's just a way for you to easily see that it's a different bid. You know what I mean? So that's, again, it's just ease of access. That's all it is. Easier on the eyes, as opposed to if it was all the same color. You know, you'd have to look closely to see, oh my God, is that still a 62 or is that a 62? You know, so it's just, again, it's just ease of use. That's all it is.
And we got a couple people. AH came in. How do we get access to level 3? You got to pay. It's usually more money, right, Luch? And you'd have to do that through your broker.
Yes. Most brokers won't even give it to you. Okay, most brokers will not even give it to you. And again, you just have to pay for it. That's all it is. But again, I know most retail platforms will not allow access to level 3, and they don't even offer it. They don't want you to have that information too. By the way, they don't want you to have it.
That's why we got Lucci on your side. He's gonna get you the best. Yes, Luch, we got a lot of questions on this, and I just want to make sure we clarify it. On the right, the difference between what you have on the right there and the two things you have on the left, like the two things on the left are the level 2, and then explain that the time and sales, and make it real clear what the difference is, because we got a bunch of questions on that.
I had a feeling we're going to come back here. So guys, make sure those of you who are still unaware or still not following here, write this stuff down. Okay. So what is happening here? Okay. All you're looking at is bid, ask, and then transactions. Okay? So again, bid, ask, transactions. What the columns that you see here, this is your level 2. Level 2 is comprised of your bid and ask. All right? Now the market makers are going to be whatever they are for each bid or offer. All right? So if somebody's on Arca, if somebody's on EdgeX, if somebody's on INET, whatever the hell they're bidding on or whatever the hell they're offering on, those are going to change respectively, okay? But both columns, for bid and ask, you're going to see your market maker, and then you're going to see the size, okay? So in this case, somebody wants to buy 100 shares on Arca. In this case, somebody wants to buy 100 shares on EdgeX. Remember, when you're looking at your level 2, they cut these things down just to minimize size and data and all that kind of stuff. So they take out the 2 zeros. So 1 means 100, 11 means 1100, 8 means 800. Okay, and these are shares, all right? So now you got your offer side. These are the people that want to sell. These are the people that want to buy right now, and these are the people that want to sell, okay? When anybody crosses, okay, and somebody just says, hey, I want to buy, then that's when you get your transaction, okay? So in this case, somebody bought 100 shares of 74.75. Remember, there's a seller here too, okay? So that is what is happening. Here are the transactions, okay? So this is what happened in the stock where people actually bought and sold things. Right here, these are just quotes. These are just limit orders, okay? So if you right now, whoever asked this question, if you right now put a 100-share bid to 74.65, you would pop up at the top of this order book, okay? Now, if you didn't want to bid that and you just wanted to buy now, what are you going to do? You're going to just buy this guy who is already offering 100 shares. And then you would come out on the tape at 74.75 for 100 shares. Okay? That's how this works. That's how this all works. You got to understand those simple concepts here before you can actually understand what's actually happening. Okay? So that's the quick spiel. Kyle, do you think that was enough, or should I keep
going? No, I think that's good. And everybody, if you need more on that, keep asking. We'll get here until you have it. All right. Luch, this is a really good. I got these questions earlier, but I wanted to wait till the end here. And this is probably a good segue. The dark pools. What's the difference between the level 2 and the time and sales when we're talking about dark pools and sales going off in the dark pools?
Perfect. That's a great question. That is a great question. So what happens on the dark pools, guys, is that there's lit pools and then there's dark pools. The lit pools are the ones that you can see on your level 2. So this guy that's bidding 300 shares on EdgeX at 74.60. This is a lit pool. These are all lit pools. They're lit up and you can see them. Okay? But there is these things called dark pools. Now, dark pools, you can't see them. You don't know there's liquidity there, but you can't see them. Okay? And they exist between the bid and the offer, but you can't see them. Okay? And this is another key way that smart money and institutions can hide their intentions from people like you. So let's say somebody wants to buy a significant amount of, let's say, Priceline or even this Nike. Okay, so let's say somebody wants to buy 50,000 shares, but they don't want to move the market, right? If they buy 50,000 shares, what do you think is going to happen to the stock? Guys, answer that question. If they buy 50,000 shares in the market, they send a market order for 50,000 shares, what do you think is going to happen?
All right, we're getting some answers in here. If they going off at the, someone asked, is it going off at the ask? People said it's going to move the stock. 50,000 shares going off, moving. Yeah, they're saying it's going to move the stock to the upside.
Exactly, right? Exactly. You're going to push the stock up. He'll push it himself up, probably to 76, right? And then if he buys a market order of 50,000 shares, what do you think you're going to do? What is your retail behind going to do when you see that order go off? You're going to buy in front of him. You're going to get antsy, and you're going to buy right there. You're going to send a market right after him, right? So these are the dynamics that happen that push stocks up or down. If you don't understand these dynamics, again, you don't understand really what the essence of tape reading is. That's what the essence is. All right? So if that guy wants to buy 50,000 shares and he doesn't want to move the market, you know what he can do? He can go in the dark pool. He can go in the dark pool and try to get it filled. Now, again, if he has those relationships, okay? Dark pools, they select with who they want to participate with. They also deny you as well. It looks like I just lost that level too. Hang on one second. I don't know what just happened. Okay, here we go. We got to back up. You guys can see this, everybody?
Yeah, we're good.
Okay, so they can go in a dark pool and find the liquidity for that particular order, okay? So what they used to do way back in the day was this thing called Instinet, okay? So it was this little machine that you had that, let's say you wanted to buy over 10,000 shares, right? You wanted to buy 100,000 shares of a stock. You would ping it out on this machine, and then some of the other people, whoever else had that access to that machine, which was, by the way, too expensive for you to get your hands on, they would ping back and say, okay, I'll take the other side of that trade. Okay, that was the first dark pool. That's how the first ones were created. They were created for the large players to get in and out of large size. Okay, without showing what they want to do in the market. Okay, because if you show that you want to buy 50,000 shares, well, then everybody's going to see you. Everybody's going to see you, and everybody's going to jump in front of you, and you're not going to get your order filled. So these are the things that the institutions have to deal with. Okay, and this is what drives stocks up and down. These are the dynamics that move stocks up and down through supply and demand. Okay, and through the players that move the markets. They can use these dark pools to get in and out of large positions.
And what's cool, folks, is I moderate these chats, but he taught me all of this months back, and I was in your seat, right? Like I was trying to figure out how this all works, and I remember how complicated it seemed, but it's like all of a sudden it snaps and you get it, and once you get it, it's one of the best tools you can use because that's the only place where you're going to see what the dark pools are actually doing. And there's a lot of questions coming in here. What about this price indicator with this chart and stuff like this, and this tool and the MACD? Those are all lagging indicators, right? So that time in sales, that's the only place that you're actually getting it right there. So you know the volume when it's coming in, and that's the true price action. And you ask, and I've talked to over 1,000 professional traders as I'm interviewing them to come onto the MarketFi platform. It all comes down to price, okay? So that's really, really important. Here, I got a question from Mike Z, and it's one of my favorite questions, Luch. What about fakes? What about head fakes?
Well, my friend, that is it, man. I mean, that is it. Anybody who uses, and there's your proof in the pudding, right? There's your proof in the pudding. I mean, anybody who uses technical analysis, anybody who uses these indicators, anybody who uses things that again that are promoted across the street, and everybody accepts them, and everybody uses them as tools to indicate whether they want to buy or sell something. Those are the ones biggest prone to situations like fake outs. And you saw the one on the LVS that I showed you, and that's a perfect example. So what happens is everybody is pushed to buy at one point, right? Everybody is pushed to buy or short at one point, right? And then everybody just gets loaded up. They know everybody's stacked up because, again, smart money sees your flow coming from a mile away, and they see everybody else's flow. So they know everybody because they're the ones writing you the contracts. They're the ones on the other side of your trade, right? So what happens is they see all you coming a mile away, okay? And then they say to themselves, okay, this is too much. This is too much here, all right? And boom, they rocket that stock in the other direction, okay? They shake everybody out of the position. You, your mother, and your sister, and your brother, okay? You guys all get buried on your trade, and then your move happens, okay? How many times is that? Raise your hand or say yes or no if that has happened to you, okay? You go long, you get heavy in a position, you think you're good, right? All your little indicators tell you, yes, it's good to go, let's go, and boom, you get faked out. You lose, you take your loss, right? And then your move happens. Your move eventually happens, of course. It always does. Okay, that's the nature of the markets, okay? And again, this is like the human behavioral aspect to the game. And this is one thing that we really preach in our sort of methodology and the way that we teach, is you have to expect that. You have to understand that happens. But you can only understand it if you understand how the smart money plays and how the market makers play. Otherwise, you can't wrap your mind around it. It doesn't make sense to you, And that's one of the reasons why you want to use the tape.
All right, yeah, let's pull that one back up one more time. I got some more questions on the slide or the window you were just on.
Sure.
But Warren, I'll answer this one real quick. Assuming there is aggressive buying, at what point do you decide it's time to enter the trade, and how do we choose the strike? All right, Luch, I want you to go over how to enter the trade. Warren, real quick though, on entering the strike, that is an entire other concept that Lucci, has a 12-day live course on, going over in depth on his option strategy. So we're not covering that tonight, but Luch, when you talk about all of a sudden you see aggressive buying, or selling for that reason, how do you decide? When's that inflection point?
Right. And again, I mean, that is the key. That is literally the key to tape reading here. When you're sitting here and assessing the strength of these orders, you're assessing how aggressive these buyers are. And you're assessing, will they come back? Do they continue to come back? And if you take a look at names like Priceline, and you take a look at names like Tesla, or whatever these things are. Actually, I think we can get data. Oh yeah. So you take a look at names like this. Is that you consistently see aggressive buyers come back in these names, and aggressive buyers to the point where they are again just smacking every single offer they can get their hands on. So again, like you feel this, you feel the demand for these things when you're watching tape, and that's enough for you to hop in an option, okay? And that's enough clout for you to go ahead and make a trade out of it. And again, this is your assessment of the tape, whether there's a move in there or not. You might see a bunch of people buying on the offer, but then you might see sellers just smack it right back down. This is no conviction. That is where there's no clear player in the game. And there's a lot of theories that can be built around tape. And again, you have to read enough of it to start understanding the different methodologies of the larger players out there. I mean, that's what you're trying to do. Essentially, what you're trying to do is you're trying to get a read on the footprints of some of the larger players out there. And if you can do so, there are some pretty huge swings and pretty huge trades that you can make off the backs of this. But remember, They have access tools and so much stuff that we don't have access to, and that's the one major key. And the one caveat is they have access to all your retail flow. And again, for those of you who don't understand this, these are really advanced structural concepts that go sort of in the plumbing of the markets, where all of you people who sit, 90% of you guys who have no idea where your order goes, well, that's the game right there. They're not concerned with making alpha like you guys are, right? They're not concerned with buying a stock and selling it higher. They don't give a crap. They're concerned with how they can route your order to an exchange that's going to pay them the most for it, okay? Meanwhile, all that is happening in fractions of a second when you send your order, and you have no idea that this is going on. Okay, so again, there's a lot going on behind the markets, behind actually what you can see from your charts and from your trades that you make on a daily basis. All that stuff is pertinent to you understanding how the market works. Once you understand that and how the players are involved, you can start making some real money.
Here's a healthy skepticism from Wong. He asked, will our platforms provide actual real-time in sales, or will they be delayed?
All right. Let me put it to you this way, and not to knock on any of the platforms out there, and take this with a grain of salt. But at the end of the day, it is what it is. So when you're taking a look, let me pull back up this Thinkorswim platform here for you guys. So what happens when you're taking a look at a lot of retail platforms, especially this Thinkorswim? Platforms that are heavy in back-end stuff. So for example, this Thinkorswim, like, you can do everything on this platform. You can scratch your ass with this platform. I'm telling you, you can make a banana smoothie with this platform, right? All those bells and whistles with the platform. It slows everything down on their end, okay? They gotta have servers, they gotta have all this kind of stuff. It slows everything down on their end. I know for a fact, time and sales on Thinkorswim is delayed for at least 20 or 30 seconds, okay? Now, I know this because if I pull up my time and sales through my institutional platform right next to this one, my institutional platform is way faster than this Thinkorswim, okay? So to answer your question, no, absolutely not. It is not super real time. I mean, it's there. Don't get me wrong. But again, it is not. It's not on the ball. Okay. And the ones that are the stripped down platforms that don't have any of this stuff. And guys, remember, institutions and smart money, they don't use any of this stuff. Okay. They don't use any of this stuff. They look at price action. That's what they look at. They look at tape. They look at your retail flow. They look at where the order flow is, and they look at tape. Right? That's what they look at. They don't look at Bollinger Bands. They don't look at any of this stuff. Okay? They don't care if you can go back 3 months and back test your strategy, and oh my God, you're a genius because you made X, Y, and Z. Then you roll out your strategy and you're getting your ass smoked. Okay? So they don't care about any of this stuff. That's not what they do. They look at price action. They look at buyers and sellers. They look at who's in the market. They look at your retail order flow, and they see where they can screw you. That's what they do. All right, that's their game. So to answer your question, no, it's not real time.
All right, Luch. We got a lot of people, Chrissy especially, coming in asking, can we go back over and I think that this would be good to touch on one more time. Now that we've gotten away from it and we can kind of pull it back up, the live example where you went over and everything was flowing through, can you show and walk step by step again, and you did a really good job the first time of showing when something comes through what you're thinking and what that means for the price action, and relate that to say, okay, if this happens, I'm almost ready to buy. If this happens, I'm almost ready to buy, and where that price action is pointing that stock.
Okay. Let's give me 1 second. Let's pull this thing up.
And folks, while he's pulling up too, make sure to keep your questions coming in. We'll make sure to get you guys as far as you need to go. Okay. A lot of people coming in really saying that's a lot of people don't say about the platforms, and it's Charles said thanks for showing that about what platforms are good or not, because I think that, I mean, shoot, if you're 20 seconds delayed and you don't know that on your level 2, that's really important. So.
Yeah.
Thanks for the compliments, guys. Keep them coming.
Okay, so to go back over this, basically what we're looking for, let's say you wanted to take this stock long, what you're looking for confirmation for you to actually make a trade, whether you're going to buy this equity or whether you're going to buy this option, is you're looking for aggressive prints on the offer, okay? You're looking for your bids to slowly step higher, and you remember that slide that we showed you for what you're looking for on the long trades. So notice, even when you see a bunch of these downticks, like the bid still sits there. There's no real follow through on the sell side. Most of the orders that you're going to see are going to go off on the offer, okay? So if I see this 183 go through, okay, and I see a bid at 183, and I see someone pop up a bid to 183, then I'll say to myself, okay, you know, there's a decent amount of buying here, and I might have a trade. So notice we get a couple bids pop up into the 90s. So what we want to see is this thing go through 183, and then you want to see somebody plop up a bid over 183. You want to see some aggressive buyers that step up their bids through a new level. So, you know, basically this is just a step-by-step sort of process. And again, this is just short term here, you know, just 5 minutes of tape to see if we want to make a trade. So basically all we're doing is we're assessing the strength of the buyers, okay, and we're also assessing what the sellers do in reaction to that buying. So see, notice most of the transactions are all going off on the offer. All right, so you see high 90s getting printed. Here we go. We got 2,000 shares at 183. You're going to see this like disappear. My thing with this particular tape is that there's still sellers kind of hanging around and dropping down offers. And again, every tape, by the way, is different. You got to realize that every tape is different. So now notice we're through 183 here. I want to see a bid come up through 183, and then maybe it's okay for a particular trade. Okay, so notice here goes another bid stacking up. You got a couple 800 shares, 700 shares. This is good. There goes your prints into the teens. Okay. So now I know I have a bid. I have a buyer over 183. I'm not that motivated by it, but I know I have a buyer here, and sentiment here is definitely bullish because you do see a lot of offers getting printed, 2,000 shares, 3,000 shares. So there is a buyer back here chewing up all that size. So it's enough to go ahead and say, okay, let's go ahead and at least ping this thing for a long. You know, whether you're going to do it for an option or a particular stock. By the way, maybe like an hour later, or probably like 20 minutes later, this stock was at like 185. So, you know, it was good enough data for a nice long trade.
I got about a dozen people that just came in and asked what platforms do you recommend for, you know, retail if they can't get proprietary or whatnot.
That's a tough question. I would say again, that's a difficult question to answer simply because they all lack in something, and it shouldn't be about your platform to be the difference between you making money. I mean, you still have to know what the hell you're doing, you know. So I would recommend getting a discount broker for cheap options commissions, and then using something like Fidelity or whatever, Thinkorswim for actual data. So the idea is to cut down on commission costs. However, you can do that. So right now, like the commissions are like $1.25 at Scottrade. You might get 75 cents from somewhere else. If you can stick to the lower end of that range or get even cheaper than 75 cents, you know, it's a good way to do it. But make sure you have a platform that you can actually get some data through. You know, I mean, there's some web-based platforms that you just can't even see anything. You can't get them time and sales. You can't get a level 2. You don't even know what the market is that you're playing. So, you know, it's not really going to help you too much. So I would combine two. You know, I would combine a Thinkorswim with some discount platform that you can just send your orders through. So host your money at the discount broker, and then get your data through like Thinkorswim or, you know, whatever it is.
All right, and I'm not, this isn't supposed to go live until October 15th, but I have a sponsorship coming on board, Benzinga, where it's a discount options broker that's going to give us exclusively through Benzinga 150 free trades. So if you can email Kyle at MarketFi, let me know if you're interested in that, and when it goes live October 15th, I'll send you back an email so we can get you guys hooked up. Okay, that's just another benefit of being over here, guys. Okay, I got a question from Charles R. What about sentiment of overall market for order flow context?
Overall, say that again. Overall.
So what about the sentiment of the overall market in terms of order flow context?
Okay. Now you're getting into some of the nitty-gritty stuff that we do watch here. And again, it's about you being able to get access to that order flow. You know, a lot of people, again, like they don't know how to read it. So the movement and sentiment in markets just by order flow is huge. I'll give you a perfect example. You take a look at what happened today the indexes were super weak, right? We went down to lows on the SPY, but what happened in Priceline, Tesla, and everything else, right? They're screaming to all-time highs. So, you can really gauge the sort of truth of a particular move just by looking at order flow. So you're looking at order flow in some of these techs and these high flyers, but then you're sitting here looking at the market, and the market is telling you we're weak, but it's all bogus. It's all bogus. You saw that 8-handle rally at the end of the day. We ended up back at, nice break even. So you can really gauge a lot if you know if you understand order flow, especially within different sectors and how it moves into different sectors. So absolutely, but you got to start with understanding how it all works to begin with.
Got some people asking, Sanglucci, that's a loft. He lives in New York. New York downtown, actually he's right in the downtown district, so yeah. Everyone's asking where's that place at. I'm in Detroit, way nicer, so. Luch, can you go back to the PowerPoint? So guys, we have a lot of people asking about Lucci's option strategy and asking about, like, when he's talking about buying and, a weekly contract at 20 cents and stuff. So we do have something, there is, obviously, today was only 2 hours. We still have a lot of questions that we're going to go over. But we do have something else for you guys too. This is just tape reading and just price action. But what we do also have, we want to offer to you guys, and this is by far the absolute lowest Lucci's ever offered something like this. But October 1st, we're actually going to do a live trading session at 9:30 in the morning. That'll be recorded, and that's going to go over this in real time. So everyone's asking, can we see exactly how you go over the what you're talking about, but in terms of the trades you're actually taking. So I think it said somewhere, Luch, you're going to trade Tesla that day. Is that right? Or is it going to be something else? I don't know.
Yeah. So for that day, it depends. I'll probably trade the Tesla, but it depends. Whatever's hot that morning, I'll let you guys know, and we'll trade that. So we'll see what happens.
All right, guys. I just reopened the chat and I dropped the link in there. Okay, so go check that out. Let us know you guys have questions on the product. You're also, now this is what's really big, you're also going to get a seminar, so another seminar, but this one's going to be on Sanglucci's options strategy, okay? So now we learned price action and time and sales. We looked at the level 2. We talked about the platforms. Now you're going to get a first-hand look into exactly how he takes this and actually makes trades, okay? We're going to talk about what stocks we're looking at. We're going to talk about what strikes we're going to go at. We're going to look at the weeklies versus the monthlies. We're going to look at buying versus writing, and we're going to touch on all of that. Now, there's a much bigger course for all this, but we're going to go into a 90-minute seminar with 30 minutes Q&A on all of that. Okay, so you're going to get a look at Lucci's options pricing model, which is proprietary. This is what's made him all of this money. Okay, so check out the chat. I dropped the link in there. Let me know if you guys have any problems or questions on that. Again, I'll put a number in there too. Okay. Some questions in the meantime, all right? So let us know if you have any questions on the actual product. There is only 25 seats available because we are doing the live trading session on Tuesday, October 1st, which is at 9:30 in the morning. Lucci, this is a question we always get. Why do the morning like that?
Okay. Well, you got to further that. Why not? Number one, the morning is the juiciest. Like, there's always the craziest stuff happens within the first hour. And I know, see, that's the other thing. Most of you guys who, again, aren't seasoned or haven't been around a lot, you get told that you shouldn't trade within the first hour. That's what you get told. Everybody gets told that, and again, it's a good thing to do for traders who let's say need to understand markets and need to take their time with things and all that. But the biggest moves happen from 9:30 to 10:30. That's just what's been happening for the last, year.
Okay, cool. Yeah, and everyone coming in asking right now, Jackie just asked, both of these will be recorded. So the live trading session and the seminar, the options strategy seminar will be recorded, just like tonight. Everybody will get tonight's recording as well, okay? But there are only 25 seats available, and we have a lot more than 25 people, okay? And the reason that we did this is because we want to, we know that this is a lot, and we want to make sure and be very hands-on. And for me, it's more important that you guys understand this than we, have 1,000 people in here. Okay, so 25 seats only available. I know those will go fast because tonight's seminar went really fast as well. Okay. All right, Luch, I'm gonna go back to some of the questions. Is that cool?
Yeah, go for it.
All right. So let me pop back over to this. Okay, Dennis B asked, You know when you were on the time and sales and it had the up and down arrows?
Yes.
Can you explain those real quick? Because on the one, and I think this is where Dennis's question is coming from, on the one where the arrow was down, you were actually talking that was a good a sign for the bulls on the way up because they were eating up that big order.
Okay. All right. Let's go back to. Oh wait, it was here in this presentation. Okay. So again, you have to look. You have to really look deeper into these things. I mean, that's kind of the pitfall of most. Use your. But it's not necessarily what's going on. So you see a down tick right here, right? Oh my God, it's a red tick. Oh my God, it's a red tick. That's bad. Oh my God, I see red. Oh my God, it's bad. But you got to look deeper here. You got to look deeper. And again, if I could show you the rest of the hour, it would really just resonate with you that this guy had so many shares to buy. Okay, somebody sold to him. Okay, all these shares. And what usually happens, guys, is that some people are on both sides of the trade. I know this is going to be complicated to understand, but when somebody is trying to build or amass a significantly large position, in this case with this LVS, right? What happens is that if somebody wants to buy 500,000 shares, what they do is they buy 750,000 shares and they sell 250. Why do you think they do that? Let's just throw it out there. Let's see where you guys are at. I mean, if somebody wants to buy let's say 1 million shares, why do you think they would buy 1.5 million and sell 500,000 for that particular order? Or to break up that order and get that position? Why do you think they would do that? Anybody? What do you guys think?
Kind of mixed reviews. No one really knows.
Okay. All right. So the idea is to hold the price of the stock down. If you want to buy 1 million shares, okay, you use the other half. Okay, you use the other 500,000 to hold the price of the stock down. Okay, these are some of the strategies that large money has to do. They have to do it to mask their intentions, make sure they get their position within a certain price point. Okay, without pushing the stock up. Okay, so what happens is, this is generally what happens. When people are amassing large positions. So what was happening on this LVS tape? Even though it's a down tick here, you got to realize that if let's say I am the one who had my 10,000 shares out, okay? Now, one thing I want you guys to understand is that this is the same 10,000 shares every time. It's just being re-quoted every time a transaction goes off. So if you guys think this is a different guy, that's incorrect. This is the same guy, okay? Now, I'm going to stay here with my 10,000 shares until somebody sells me 10,000 shares and I disappear, right? In order for this stock to go down, what needs to happen? I need to stop buying at 58, okay? That's what needs to happen in order for this stock to go down. Now, somebody sells me 5,000 shares. I should only have 6,700 shares left to buy, right? If I'm showing that I got 10,400 to 10,700, if somebody buys 5,000, then I only have 6,700 left to buy, right? No. In this case, no. I got more. So I don't care if somebody sold me that 5,000. I reestablished my order at 10,700, at 11,000, okay? So somebody sold me 5,000, but I reestablished my order at 11,000, okay? I said, it doesn't matter. I want another 6,000. I want another 5,000. That's the dynamic that you're seeing. And again, like I was able to scroll through this tape for this presentation that I did out in Chicago. And again, what you saw for the next hour was this guy sitting at 58, okay, chewing up thousands and thousands and thousands of shares, all right? This guy went nowhere. He came back. He kept coming back with more to buy. He kept coming back with more to buy, all right? And that's really what you're seeing here. You're not seeing the fact that this is a down tick, okay? Forget about down ticks and upticks. Down ticks and upticks, at the end of the day, you're going to see them fluctuate all over the place. There's even programs out there that calculate the number of downticks versus the upticks, and that gives them a trade signal. Whatever. Again, that's nonsense. To me, tape. It's all about the orders that go off and then understanding what's going on here. Whether you get a slew of downticks, even if you get a slew of downticks, but the stock isn't going anywhere, then you should know that stock is strong. Okay? Then you got a ton of downticks, but the stock is still up there. Then what are you doing shorting that stock? Somebody is clearly holding it up, okay? And it doesn't matter how many downticks you see, right? So this is sort of the advanced concepts of tape reading that you only truly grasp when you understand how it all works, so to speak. Okay, and when you start thinking beyond, oh my God, up to, oh my God, it's red or green, or oh my God, it's 5,000, I should get out of this. Okay, so there's a certain sort of level that you reach where you start understanding, like, okay, what means something and what doesn't. Okay, and that only comes with practice.
All right, cool. Luch, do you know if IB is delayed?
IB is actually one of the better ones out there. But again, whether it's everybody is delayed to some extent, okay, because who's ever getting the data feed for you, it depends on how close to the actual NYSE and NASDAQ exchange servers that they are. So everybody is delayed to some extent. It just depends on who's more and who's not. IB is one of the better ones out there. So I mean, they're definitely delayed, but not as much as maybe a Thinkorswim.
Luch, will you pull the product slide back up again, the last slide? We got some questions about the product.
Sure.
I'm dropping that link in the chat again, guys. I got a couple people asking where to go get that. Luch, I got, let's see, Pinkin S. Do you teach market structure?
Not yet, but we write about it. So when you get a chance, go to sanglucci.com and click on the market structure section. There's a lot of articles there about high frequency trading and the structure of the markets. So we do write a lot of content about it. We are going to be offering a class soon about market structure and some of the deeper stuff about it. And then again, it's most of the retail money, they have no idea any of this stuff happens. So the demand for it is not quite there yet. I think it'll probably start coming up quite often once people realize they've lost their edge completely in this whole game.
Charles R. asked, the VIX also shows real time, the actual sentiment. Do you use that for direction at all or flow?
No, VIX I stopped using a while ago because it's not I don't think it's an accurate indicator of what's really going on in the market right now. I think that ETF is very manipulated. I think that ETF now is very active in the sense that it's mispriced completely. It doesn't gauge things properly at least as much as it used to. And then you got the offshoot ETFs like the VXX and the TVIX and those things. Once they launched those things, I mean that's when the hell went. That's when it all went to hell. So again, I don't use it for any indication whatsoever.
All right, Michelle is asking about what stocks we look at. I think you mentioned a couple of medium stocks earlier. Luch, give me a little taste. What are you usually trading with this kind of style, and what kind of stocks do you need?
The only stocks that I'm looking at is the volume in the options. I mean, that's one thing that I'm very concerned about. I need to be able to amass a significant amount of size in the options. So that means a LinkedIn, an Apple, a Tesla, all of these names you can amass, a $200,000 position, a $500,000 position. I can really move some money in these things, and that's the reason why I choose these and stick to these names. So I stick to some of the bigger names out there where I can move in and out of a lot of contracts, and these things move quite a bit as well. You take a look at LinkedIn, Google, even the banks like the Goldman Sachs, Visa, MasterCard, Netflix, all of these names, they move on a daily basis. So there's plenty of game there. You just got to understand what's going on.
If I can't attend the live tape reading, will I get the same value out of watching a recording? Yeah, you will. And if you have any questions from the live tape reading, and what the live tape reading was, is we can match the chart to the time and sales, and that's what's really powerful about it. But if you can't attend, it's not a big deal, Jackson. We'll send you the recording. You can still ask as many questions as you want, okay? Good question, though. All right, this is a good one, too, from Naga M. Luch, how do we know how long the trend will continue in the same direction? So it's kind of talking about, like, okay, we got in, but, when do we get out?
Great question. Great question. This is one of the difficult parts of tape reading. And again, like you might get in a big swing trade, and you might end up selling out too early because there's a big shakeout. For all the people who are, holding long positions, and then the move will continue. So the question is, how do you know to hold through these things? Well, to be honest, I mean, tape can help you, but it can only help you to a certain extent, meaning that you're still going to have to deal with it emotionally. So now you got the psychology of it coming in. So the idea here is to combine these swing trades with market sentiment. So if you know the market is still bullish, and you're relatively bullish on the market, and you think the SPY is going to continue going higher, and you're in a long trade, but your stock is sitting in consolidation, well, you have enough clout to hold on to that because the market is still in a bullish pattern and still going higher. So therefore, your stock is eventually going to get out of that consolidation and continue its move higher. But you just have to sweat it out. You have to sweat it out during the shakeout and during the consolidation, which is difficult to do, especially if you're trading options. If you're trading options, you know you get that time decay. You know you also get that sentiment decay. So as soon as that stock goes into consolidation, nobody wants to buy your option anymore. So nobody is paying up for it. That way, that also means your P&L is going down. So this also, it does a lot. It has a lot to do with psychology of trading too, which is another thing that we talk a lot about. So how do you know? Again, these are some things that you need to combine across your market in a bullish environment. I mean, it's very easy in a bullish environment. If we are if we are just charging higher every single day, again, it's a very easy market. But that's nothing to be said here or there. I mean, tape reading, again, can be used to get you to adapt to all the different trading environments that happen. So, for example, if we go into consolidation and there's just up and down chop action like we've had through a lot of the summer, and there's nothing really to trade aggressively, then you need to peel back your directional trading and start writing options, okay? So tape reading can help you find where the changes happen, where the shifts happen, and then so you can adjust quickly before sort of getting smoked on that same directional thing that you've been trying to do thus far. So tape reading can really help you adjust, and that's what's important in order to stay relevant and to stay in the game. I mean, most traders, they come into the game for a year and then they disappear. They can't make it work, so they disappear. Tape reading and focusing on price action can sort of allow you to stay relevant because you stay in the game for longer and open yourself up to more opportunities.
All right. Cool, guys. We're going to wrap it up here. Like I said, if you have any more questions, I just dropped our email and our phone number in the chat. We'll answer as many questions as you guys send our way, so please do. We want to make sure you guys understand this concept.